Imagine this. You go to the bank, you get a loan facility, then for some reason, because of harsh economic times, you start to struggle to repay that amount. And because of that, the bank manager has to keep calling you every now and then to remind you to make the payment. Out of frustration, you ask him, how much do you stand to profit if I die because of the stress that you are piling on me? That may sound like a very innocent question, but in the real sense, the bank manager stands to profit so much because the moment you took a loan facility from the bank, they insured your life against the amount of money that you owe them. So in the event that you are not there, the bank manager would go all the way to the insurance firm laughing to compensate the money that they had insured your life against. If that is clear, there is a concept referred as insurable interest, which basically means someone has some interest in you. Someone is said to have insurable interest in you if they stand to suffer a financial loss in case you die. And you have an insurable interest on something, an object, a property, or an asset, if its damage, its destruction would lead to a financial loss in you. Maybe it's a car that you own, maybe it is a building. If that car, asset, TV, a good phone, a laptop is damaged, destroyed, or stolen, indeed, if it is yours, you stand to lose financially. And therefore, you have the right to insure such a person or such a property or asset. Remember, your spouse can insure your life because in the event that you are not there, they would stand to lose financially. Your children can insure your life, or you can insure your life and put your children as the beneficiaries. Only that you really need to be careful on who you are giving the permission to insure your life, because in the event that they are not very comfortable with you or they are not happy with you, they can easily eliminate you so that they can go all the way to the insurance firm laughing to get the compensation for your life. But now, allow me to discuss this concept of insurable interest. But now, allow me to discuss this concept of insurable interest by giving practical examples where we usually go wrong. Number one, you own a car, and this car is registered in your own personal names. But because you also own a company, 100% it is your company, and this company, you use it to pay for most of your expenses, including the taking and processing of the insurance cover for your vehicle. So at the end of the day, it happens that the insurance cover for your car is processed in the name of your company, but the logbook of your car is in your name. That's a big mistake when it comes to insurance. Why? Because if your car is involved in an accident and you want to process for compensation, now, so the documentation that you will be required to provide to the insurance firm is to the tune that the ownership, which is proven by the logbook, needs to match the name appearing on the insurance policy. But for your case, the insurance policy is in the name of your company and the logbook is in your personal name. And in law, your property and yourself, these are two different entities. You are a natural person and your company is considered an artificial person. So the insurance person finally tells you, it is very unfortunate. We cannot be able to compensate you for the loss that you have suffered in the damage of your car. Why? Because the person or the entity that insured your car does not own it, that is your company, and you as a natural person who owns this car did not insure the car, and therefore you don't get anything. It is a lesson that people often learn when it is too late, and it is an expensive lesson. Mistake number 2, and it's about cars. You buy a car, a second-hand car. Maybe I sell a car to you, the car that I drive. And as we speak, the insurance sticker for my car is supposed to expire in June this year. So I sell you the car, and you also interact with the sticker. You realize it is still valid up to June this year. So you say, why do I need to process another cover and the one that is on the car is valid? So you don't process, and police will stop you along the way. They come, they check whether the insurance cover is valid, and according to them, it is indeed very valid. So they will tell you, it's okay, you go. Can I see your insurance sticker? They check. Can I see your driving license? They check, they let you go. However, in the event that your car is involved in an accident and you rush to the insurance firm for compensation, you will be very shocked, because what the police thought was valid, it was not valid in terms of the insurance. This is what happens. The same story, that you will be required to provide documents of ownership of that car, and the document of ownership of that car are in whose name. Give us then the insurance policy. The insurance policy is in whose name? The name of the previous owner. Is there a match? Of course not. There's a mismatch. So they explain to you again, like a 2-year-old child, that the owner of the car did not insure this car, and the person who insured this car, as per our database, is a person who is no longer an owner, and therefore we are not going to compensate this car. We are not going to compensate for the loss that you have suffered. It is a costly mistake that someone can learn. In fact, let me say this: anytime you buy a second-hand car, ensure that you process for it an insurance cover as soon as possible. There are insurance covers that you can process for a day, for a week, just to make sure that when you are transitioning from the marketplace, wherever you have bought that car, to your home, that car is insured and it is in your names. Because the moment you put the pen to the paper to sign the sale agreement, whether you have finished paying for that car or not, and whether the NTSA transfer has happened or not, already the ownership, according to the Law of Sale of Goods Act that we have in Kenya, the ownership of that asset transferred to you, and therefore it is you who have insurable interest, not the seller. The moment you sign the agreement, the ownership transfers. It doesn't matter whether you have paid for the car or not. Because remember, if you come to my shop and I sell some goods to you on credit, and we agree that you will pay me after 3 months, those goods, it's a hardware. Even if you are yet to pay me the money, as long as I've given you the goods, it doesn't matter. Even if you have not paid, you have signed a credit, you have signed an invoice that I've invoiced you. Those goods belong to you. In case of anything happens, it is your loss, not my loss. You would still pay me for the goods that I paid you, delivered to you on credit. So the concept of insurable interest is very key when it comes to matters to do with claims. And more importantly, even when it comes to taxes, if your car is registered in your personal name and you want to claim the car expenses as company expenses, KRA will not be agreeable to that. KRA will say these expenses for this motor vehicle, they are not business expenses because it is owned by a different person other than the company. So to just make sure that you don't have or you don't get into any trouble with the KRA, just make sure that all your assets, the ones whose expenses, servicing, maintenance, you need done by the company, then they also need to be owned by the company. And it is very, very important for you to always keep proper records. Why? You know, some people do insure the household items. You have a TV, you have a fridge, you have a laundry machine, you have some gym equipment, whatever that is in your house. Perhaps you are insuring against theft or maybe power surge. In the event that there's a power surge or these items are stolen, the insurance firm would require you to provide them with evidence of ownership. Don't just say that you went to the insurance firm and filled some form. I have items, this worth of items in my house, and they did not come to verify, and you did not bother to put in a file somewhere the receipt proving ownership. In case of anything happening, insurance firm would not compensate you unless you are able to demonstrate to them that indeed you own this TV, you own the TV, the laundry machine, the electronics, everything else that is in your house in case of a power surge or it is stolen. So keeping proper records is very important from KRA's perspective to insurance claims perspective to even you just from the business perspective, knowing how much you are making as a business. So in short, just know that when that bank manager calls you again, asking you to make the loan payments, even if you are struggling economically and financially, just be polite. Don't ask them those questions. What do you stand to gain in case I die? Because indeed, they have everything to gain in case you die, because they will go all the way to the insurance firm to get compensation, and the stress that you are giving them when they were trying to follow up with you to make the payment, it will end because they will be paid in lump sum. If you owed them 10 million, that's what the insurance firm will pay them. So be careful when you go to take a loan facility. Know that the bank owns you to the extent that you owe them. And for the car, ensure the car is registered in the name of the company if you want to take an insurance cover in the name of the company. And if you want the car to be registered in your name, just make sure that even the insurance cover is processed in your name. In case you buy a new car, make sure that you don't drive it before getting an insurance cover of your own. When you know better, you do better.